Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to The Week That Was, the weekly podcast that sums up market movements and events from the past week along with their implications on asset markets. I'm Michelle Castellino, your host for this week's episode. On the geopolitical front, tensions flared again last week after President Trump, speaking at the NATO summit on Wednesday, declared the US-Iran ceasefire effectively over. The statement followed US strikes on Iran in response to attacks on vessels in the Strait of Hormuz. Oil price spiked by over 6% for the week, though by Friday Trump said talks with Iran would continue even as formal ceasefire stayed off. We continue to see this as a controlled escalation aimed largely at domestic audiences. Iran wants oil prices to remain elevated to pressure Washington, while Trump is constrained by the need to keep fuel prices low ahead of the midterm elections. We expect US oil to trade in the $70 to $90 range, while a re-escalation of tensions after US midterm elections remains the primary risk. A likely divided Congress is expected to limit the scope for additional foreign military interventions. On the Fed, the June meeting minutes released on Wednesday, marking Wash's first meeting as chair, highlighted a genuinely divided committee. 9 of 18 officials now expect another rate hike before year-end, while the median policy rate projection for 2026 stands at 3.8%, underscoring the ongoing debate over the path of the interest rates. We still expect softer oil since April's peak to help inflation ease gradually, and think that this week's June CPI print should show inflation peaking in Q2, giving Wash room to hold rates for the rest of the year. Turning to India, GST collections for June rose 13.9% year-on-year to about 1.59 lakh crore, the fastest pace in 13 months. This was largely import-led as domestic sales lagged. India's manufacturing PMI eased to 54.2 in June from 55 in May, a 3-month low. This was amid new orders and output growth slowing, though export orders and price pressures both moderated. The services PMI eased to 57.4, a 17-month low on softer domestic demand, even as export orders hit a 3-month high. Forex reserves rebounded by $7.26 billion to $674.19 billion in the week ended July 3rd, reversing the prior week's drop. The rise came alongside the RBI's measures announced in the June MPC, including the FCNR deposit support. The combined impact of these measures could be quite significant. By making India more attractive to foreign capital, they have the potential, as per estimates, to bring around $60 to $80 billion of inflows, keeping the domestic liquidity abundant and providing additional support for the rupee. On India's monsoon, conditions have improved materially, with the rainfall deficit narrowing to 24% in July 2026 from 38% in June 2026, according to the Union Agriculture Minister. The number of rainfall deficit districts has also declined to 178 from 262, supporting a better outlook for the Kharif season. However, overall Kharif sowing remains around 21% below last year's levels, reflecting the impact of the delayed monsoon onset. Now, turning to Indian markets. It was a volatile but ultimately flattish week for equities. Gains on Monday gave way to a sharp Wednesday sell-off, with Nifty and Sensex both down over 2% on the Iran oil shock, before a 2-day recovery into Friday. Net for the week, the Nifty ended down about 0.3%, ending at 24,206, and Sensex down about 0.25%, essentially flat but volatile along the way. Broader markets again outperformed. The Nifty mid-cap was up about 1.4% and small-cap was up about 1.3% for the week. On the sectoral front, realty was the standout performer, gaining over 5%, supported by strong institutional real estate inflows in the recent month and improving global sentiment after softer US economic data eased concerns of an immediate Fed rate hike. Expectations of a more stable interest rate environment boosted sentiment towards the rate-sensitive real estate sector by reducing concerns around borrowing costs for home buyers and developers. IT rebounded about 2% after TCS kicked off the earnings season with a revenue beat and a healthy deal pipeline. Telecom and banks posted modest gains on the Thursday-Friday relief rally. In contrast, FMCG and utilities lagged, with FMCG declining over 1%. US-Iran tensions could push crude prices higher, raising the input costs, packaging costs, and potentially delaying recovery in the consumer demand. The energy sector remained largely flat despite volatility in crude prices. On the currency front, the rupee weakened about 0.1% to close near 95.33 against the dollar, reversing some of last week's gains. India's 10-year G-Sec yield ended the week nearly flat, up 0.3 basis points to 6.71%, breaking a run of weekly declines. Finally, a quick word on gold. INR gold fell about 2.1% for the week, an unusual pairing with the oil spike, as this time the shock lifted inflation and rate hike expectations rather than driving safe haven flows. INR gold, however, remains up over 7.5% year to date. That's all for this week's edition of The Week That Was. If you found this useful, don't forget to like, share, and subscribe. Thanks for tuning in and have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.